So welcome participants to our regularly scheduled Thursday afternoon Innovative Business Advisors webinar. Again, we're going to approach this very similarly to the way we have done it in the last few weeks. And that is, we had very substantial legislation passed and signed on December 28th of last year, 2020. And we are still working through the specifics of what was contained in that legislation. Today, what Steve will do for us is it's going to be a little bit of a recap and some new information that was learned or gained over the last week. So to that end, before we get started, I'm just going to remind everyone, in case we have any newbies on the phone or on the webinar with us this time, that this is the Zoom portal that we're using. Within your portal, you should see a indicator at the bottom, a portal that is called the Q&A button, or the Q&A dialogue. We're asking you to type your questions into the Q&A dialogue. So Steve will present. You will see the PowerPoint slides on the screen. You may ask questions at any point in time, and we'll make a decision as to whether or not we'll interrupt Steve with the questions or save the questions to the end, but we're very likely to answer all questions live on this webinar today. So with the logistics laid out, Steve, I'm going to turn it over to you, and let's jump into the subject matter for today.
Very good, Marquita. Thank you. And as always, we so much love your stewardship and moderating of these webinars each week. We're very grateful for what you do, and also honored to have Terry with us again this week. So we got the band back together. We're staying together on these. This is great. Good to see you.
Glad to be here.
Well, folks, we've talked over the last 3 weeks. We've done some deep dives into each of the specifics of the various programs, and this week is designed to be just a bit of a wrap up, and we're going to go back through each of them individually and answer any questions that may have come up. So I'll just share with you the agenda real quick. What we're dealing with, as Marquita had mentioned earlier, is the Economic Aid Act, which was signed into law over the Christmas holidays and is now active. In that area of basically a modification to the CARES Act, there are a lot of various programs that came into play that addressed various levels of economic aid that is available to businesses. The one that probably is getting the most play in the national media is the Paycheck Protection Program. It's very significant changes to that program. We'll summarize those again and be prepared to answer your questions. Then there was also the Employee Retention Tax Credit. This is not a new program, but there were some specific aspects of the law that were adjusted, which make this now very, very important for every business owner in the country. And then we're going to dive into some of the SBA lending, because the SBA is now in a position to do significantly more than they did in the past. And it may be the best time in the history of the SBA to tap some of these programs. So we'll touch on the Express program. We'll touch on the microloans. We'll do a little bit more of a deep dive on the 7A programs and the 504. These are all SBA lending programs. In addition to that, the Economic Injury Disaster Loan is an SBA program. We'll also talk a little bit about that, because the Economic Aid Act did influence that as well. And then there is a whole new program called the Live Venue Grants, and I've received several questions about those over the course of the last couple of weeks. I've got some additional information to share with you in that regard, and that is a program that will be administered by the SBA. So with all of that pretty big agenda, we'll dive in and talk a little bit about Paycheck Protection Program, the PPP program. So a whole set of new guidance that came out that basically the Economic Aid Act refunded the PPP and made it active once again. So if you are a business owner and did not take advantage of the PPP program last year before the window closed, you are now eligible as a first-time applicant to be able to go out and make application and potentially receive a PPP loan. Just as I'm sure our audience is well aware, these are loans that are administered by local vendors. local vendors being banks and fintech companies. So Marquita and I learned today earlier on a call that PayPal's even offering these loans. So they are available for small businesses, small and medium-sized businesses. And if you didn't take advantage of this program last year, it is available to you as a first-time applicant. But the window for applications is scheduled to close on March 31st or when funds run out. So I was looking at earlier the level of funding that's been done in the past 2 weeks. And it looks like the estimates that I saw were that it's somewhere around 20% of the total funding has been taken out of play in the last 2 weeks. So still about 80% of the allocation that was available. So potentially these funds may last until the end of March. We'll see. Key provision change that took place here is that in the past, last year, the PPP program was designed to provide 2.5 months of payroll dollars for the business so that businesses could then fund their payroll cost for at least 2.5 months. If you happen to be within the NAICS code, which is the national, and my mind's just gone blank. If you guys happen to remember what the acronym is for NAICS, it's the Industrial Classification System. It's North American Industrial Classification System. There you go. If you happen to be in classification code 7.2, which covers accommodations and food services, so anybody in the hotel, motel, rental space, accommodations or food services, restaurants, etc., all those type of businesses, you are now eligible to apply for 3.5 months worth of your payroll cost. So that's a pretty significant enhancement from where it was last year for first-time applicants. In addition to first-time applications, now there is also what's called the second draw eligibility. So even if you did take advantage of it last time and would like to take advantage of it again, you are eligible to do so. This is a new provision of the PPP loan program, and we have talked with several of our clients that have, in fact, utilize the funds from the first round and are intending to go ahead and do a second draw as well. So there are a couple of key eligibilities on that. In order to be eligible, first and foremost, you need to have already spent all the money that was allocated to you under the first draw. You have got to be less than 300 employees, so they dropped the size of the companies that could apply for a second draw. This is designed to incent basically the smallest of small businesses, if you will. And you have to demonstrate that your business experienced a 25% or greater. And I will tell you that the SBA came out with some guidance and said, if you measure your revenue drop quarter over quarter and it came out to be 24.9%, you do not qualify. It has to be 25% or greater in order to qualify. So even if you came close don't matter. You have to get over the mark of 25%. What is significant?
I was going to say, I think it's important to kind of stress that for the people on the call, that be sure and go back and check your quarter over quarter, because I have run into some clients where their 2020 year-to-date sales were higher than 2019, so they're just automatically thinking, we didn't qualify. But then they go back and look at the first quarter or the second quarter, and yeah, they is definitely below, above the 25% drop. They just recovered quickly. So if you qualify for just one quarter, that 25% drop, that qualifies you for the whole year in the money that you're going to get. So
great point. Yeah, that's it. The devil's in the details on this, and it is a quarter by quarter comparison. If you had a 25% drop quarter over quarter, unfortunately, we also worked with a restaurant company, and they were down about 22% as a whole for the year. But when they did their quarter by quarter analysis, they didn't get over that 25% threshold. So even though they had a terrible year with down sales, no particular quarter enabled them to qualify. So Terry brings up a very, very key point. You got to pay attention to that quarter by quarter analysis. And on your application, you're going to have to designate which quarter it was and provide detail about the specific numbers for each quarter to demonstrate that you meet that threshold. The other thing that is a change is that for the second draw, you're only eligible for up to $2 million maximum loan. I would say to you, remember, as we're going to talk about further, if you're going to take a second draw, and remembering that, the vast majority of PPP loans, the average loan size was $105,000 for the sake of example here, okay? So on average, PPP loans were $105,000. If you're a small business and going to take a PPP loan, and let's say you qualify for up to $160,000 worth of PPP loan, one thing you might want to think about is that the forgiveness application for loans of $150,000 and less is very easy. One pager, basically put your contact information, check some boxes, and sign certifying that you use the funds appropriately, and your application is done. If your application is for more than $150,000, you're going to have to provide all the documentation to substantiate how you use the loan. So I just want to call out and remind folks that, if you're somewhere on that 150 threshold from a PPP loan, put in your thought process that it might be to your advantage to take a loan value of $149,500 rather than take a loan value of $151,000, if you will. And hopefully that makes sense. Any loans of $2 million or more, the SBA has automatically come out and said they're going to audit all those loans. So that's another consideration. If you happen to be a large lender, you're just going to have to be prepared for the audit process and the loan. But again, a whole new program, second time eligible, is open again, which is phenomenal. The other key change to the PPP program is that they've also expanded the expense categories that you can use the funds for. So remembering that under the CARES Act originally, the program was designed for you to use the funding to cover payroll costs, and you had to use at least 60% of the funds for payroll costs. The other 40% could have covered your utility expense, your mortgage, and or your rent. Now they've expanded those allowable 40% categories to cover supplier costs, to cover operations expenditures, to cover worker protection, PPE, personal protection equipment type of expenditures, and to cover property damage expenditures that you may have experienced as a result of some of the civil unrest that took place that's not covered by insurance. So again, Congress in its infinite wisdom has provided some additional mechanisms for businesses to potentially get a broader range of use for these funds. So if you have any particular questions about this, we'll certainly take them on the call. And you can always refer to our earlier webinar where we talked about the PPP program in detail. And we did a deep dive under each of these expense categories. And I know we had some questions and clarifications that we provided in that area as well. Next, I want to talk about the forgiveness process for the PPP loans. As I mentioned earlier, they did finally come through with what we had been talking about on our weekly webinars for many, many weeks and months, in that we knew that Congress was contemplating basically blanket forgiveness for anybody that received a PPP loan of $150,000 or less. We had kind of joked about it a little bit on this channel, I guess would be a good way to describe it, to say, we knew that Congress, when they created the loan, they made the application process really, really simple. And then it seemed to be the folks that came up with the tax forms that wrote the forgiveness application, because it became really, really complicated and really detailed. Congress fixed that in terms of making the forgiveness process very simple for the vast majority of borrowers, in that if you received a PPP loan of $150,000 or less, now you simply have a one-page application of forgiveness that you provide to your lender. It basically has all of your contact information, the details regarding your loan amount, loan number, etc. You've got to check some boxes attesting that you use the funds as they were designed to be used, and you simply sign your name and certify that that's the case. And the lender then doesn't have to go through looking through all of your supporting documentations. You don't even submit any supporting documentations. The only thing you submit is that one-page application. Makes it very easy for the lender to type that into the SBA portal, and then it makes it very easy for the SBA then to issue the final forgiveness on your loan. So we've heard from many lenders that that process is working very, very efficiently, and that they're very excited about this one-page forgiveness. So if you are in a position where you haven't applied for forgiveness due to your first draw, or you're in the process of applying for a second draw and you again might be on that fence, I think it's really prudent of you to think about the amount of the loan that you're actually going to need, and whether or not you could you can utilize this $150,000 threshold as a particular point of interest in your consideration of a loan in that regard, because the forgiveness process is going to be much easier for those that are on the 150 or less. So hopefully that's clear. And then the other more explicit forgiveness applications are still in play. So the large 12-page forgiveness application that was created by the form writers is still applicable for those that have large loans under the PPP program. Also want to highlight the revised tax consequences. So the other key change that Congress made in the Economic Aid Act was that they categorically said that as a borrower, you will not be assessed any other income credit that you've got to claim on your tax return. So you don't have to claim the income from your PPP loan, and you are eligible to claim all of the expenses on your business tax return that the PPP proceeds were used to fund. So from that perspective, the PPP program is basically tax neutral for business, and that's going to be a nice godsend to business owners. And the IRS came out with some clarifications. They may not have been too excited about that, but it's always a good thing if the IRS is not necessarily happy, but the business owner is happy, I would say, in that regard. So a nice revised tax consequence, kind of the Christmas gift from Congress to all the PPP borrowers out there. So one of the other key changes that the Economic Aid Act brought about, and from our discussions with clients, we're finding that now their accountants are getting up to speed on this, and everybody is working hard right now to go back and take advantage of this. One of the components that the CARES Act originally delivered was what's known as the Employee Retention Tax Credit. And this is an immediate tax credit that that a business owner could take advantage of. However, in the original CARES Act, the law said that if you took advantage of the PPP program, you were not eligible to take advantage of the Employee Retention Tax Credit. Congress amended that and changed that with the Economic Aid Act. And they said that now you can take advantage of both. And not only are you able to do that now, but in the past, in 2020, they made that retroactive back to the original CARES Act date. So for those that were originally told that they could not take advantage of the Employee Retention Tax Credit and receive a PPP loan, that situation has changed, and now you can get the advantage of both. So this is significant. This is basically going to be found money for businesses with employees. And for 2020, the Employee Retention Tax Credit was up to $5,000 per employee for the whole year. So what this is if you have employees in your company and you're filing your 941s and you're withholding federal tax on their wages and benefits, basically it's a credit against those withholding amounts. And let's say, for the sake of example, that your taxes are less than $5,000 per employee. It's my understanding that you're eligible for that full $5,000 credit per employee. And now you can go back and claim that for 2020 when you may not have been eligible because you took a PPP loan. So this is, again, for every employee in your business, you can go back for 2020. If you did not get this employee retention tax credit, you can go back and claim that now. Pretty significant amount of money. What's even more significant is that Congress made that even better for 2021. So moving forward in 2021, the employee retention tax credit stays in place, but they've expanded it to $7,000 per employee for each of the first 2 quarters this year. So, again, work with your accountants specifically and make sure that you are taking advantage of this credit. And this is a credit. Not only does it eliminate what you may have owed, but if you claim the credit and it shows that you've got a additional credit available, the IRS will send you a check for the difference. Wouldn't it be nice to get a check from the IRS for the difference in that regard? So that is the way that this program is designed to operate. So make sure you take full advantage of that as well. So those are two pretty key programs. Next, we're going to talk about what's called the SBA debt relief programs, which are really significant for all of those folks that had existing SBA loans. There are a certain set of benefits that are available. And for those businesses that are contemplating a loan in the future, there are some real incentives to giving a good look to SBA lending from that perspective. And we'll cover both of these things individually and try and discern between the two. So first off, for existing borrowers of 7A loans, which represents about 2/3 of all SBA lending, the 504 loans, which are the loans that are typically longer term, designed to cover real estate purchases, large fixtures and equipment purchases, typically amortized over a 25-year period. And then the micro loans, and the SBA micro loans are the loans typically of less than $50,000 that are issued through a particular nonprofit entity. So all the programs apply for these situations. What the Economic Aid Act did last year was they said that they would pay 6 months of principal, interest, and any fees for up to $9,000 per borrower per month. So here is the SBA making 6 months payments for you. This is not a deferment. This is not a set aside. They just make the next 6 payments for you. Pretty nice benefit in that regard. This applied to all existing borrowers for loans that were dispersed up to September 27th of last year. So even if you got your loan, let's say you got the proceeds of your loan in September of 2020 and your payment was due in October, beginning in October, your first 6 payments were made on your behalf, and you do not have to repay that. And you will not be receiving a 1099 statement that says that you received some free money to make that a taxable event. So that's a really nice benefit. If your loans were not on deferment, the SBA began making those payments immediately. If you happen to be one of those businesses that was severely affected by the pandemic and had the foresight to work with your lender to get your loan put on deferment, as we had recommended strongly in these channels back in March and April of last year, what happens is that deferment period takes precedence. And then once that deferment period ends, and typically you would have been granted either a 6 or a 12-month deferment period on either on the period where that ends, the next period, you would have to begin making your payments. What the SBA has said is after the end of your deferment period, they would then make the next 6 payments for you. Now, just again, to distinguish between the deferment and the payments being made on your behalf, the deferment amounts, if that happened to be a 6 or a 12-month period, that would have been tacked on to the back of your loan. So those payments you're going to have to make up. But this is these 6 payments that they made on your behalf would happen immediately after that deferment period. So a nice little benefit there. And then for any loans that were made up to September 27th, whenever your first loan payment was scheduled to be made, that's when those payments would take place. So a pretty nice deal. What the Economic Aid Act did, which was certainly a surprise to us and probably to a lot of borrowers, is it said that, look, if you had an existing loan prior to March of 2020, we're going to give you an additional 3 months of payments beginning in February of this year. So next month in February, if you had an existing loan and you're up to date and current on your loan, you're going to get an additional 3 months of payments made for you. So now you're up to a total of 9 potential payments that have made on your behalf.
Hey, Steve.
Yes, sir.
We got a question from Eric Shuttered, Marquita. I don't know if you've seen it or not, but it says, I'm a business broker and my client is planning on applying for the second round of PPP. We have not yet listed the business yet. But plan on doing so this year. My question to you is, are there any repercussions for accepting PPP funds we should foresee that could negatively impact the business from closing should we find a buyer? It's really just if you get a chance to use them up. You know, I mean, the PPP isn't automatic free money. Technically, you're supposed to be, you know, paying salaries with it. And then we went over the other 4 additional things that you can use the money for. So say you sold it in October and you hadn't had a chance to use that money yet, then that piece just wouldn't be forgiven and you'd have to pay it, either pay it back or turn it into a loan.
Yeah, the PPP loan does not follow the business. It follows the business owner. So you're right, Terry. If it depends all on timing. And if you think about, you know, according to the International Business Brokers Association, most businesses are taking about 12 months to sell from the time they go on market. If it takes you the average amount of time, your client will probably have received the money, used the money, had their forgiveness application processed in place and be totally clean of the loan, and there will be no problems. The SBA has also issued a lot of guidance and has worked out a methodology for selling a business that has a PPP loan outstanding that is not yet forgiven as well. So there are some guidelines that are established about how to handle that. And as a broker, you know, you could reach out to us. We can share those guidelines with you, or you can go straight to your local SBA district office and they'll be happy to share those guidelines with you as well. And then the third thing I would say, and I just want to reemphasize this, is remember, the PPP loan follows the borrower, not the business, right? So your borrower, you need to make sure that in this case, the seller is certainly aware of the fact that this PPP loan is going to have to be dealt with in this process. And
so don't spend all the money.
Yeah. Make sure that you take care of that and educate them about what's going to happen. So if it sells very, very quickly and they haven't used all the money yet, they cannot simply just give that money to the buyer and let it transfer. So hopefully that helps. All right. There is an interesting wrinkle in the law. And this is that if you received an SBA loan between September 28th and February 1st of 2020, you are not eligible for any of these free payments. So that I think we're probably going to hear more about that. But as the law stands right now, that is the factual case. So it's kind of an interesting interesting fate for those few borrowers that were pretty active towards the end of last year from an SBA perspective. And I'm sure that there will be a lot of discussion between borrowers and lenders that fall into this small category. So if that happens to be you, I would encourage you to start that discussion with your lender. And then finally, I just want to emphasize that, these additional benefits are going to take place beginning in February. So, February 1st is next week already. Goodness gracious, we're already there. But it is going to begin next week. So for existing borrowers, I think this gives you a quick overview of what is available. A lot of money out there for existing borrowers. I thought I had it on my desk here. I was going to hold it up for you, but I've actually already put it in the file. The SBA shared the form letters that are going out, and these form letters are going out directly from the SBA to the borrower with a copy to the lender. So there is a form letter that's going to explain all of these benefits for every existing borrower that is in the current status, if you will. All right.
So Steve.
Yes, ma'am.
Regarding the question that you just answered a minute ago, one of our participants, Lynette, appears to be quite knowledgeable, and she's actually written in the Q&A dialogue the very specific SBA procedural notice, control number, and all. So we'll pull that up and make her answer available. She says that she would encourage the broker to read the guidelines, reference that the guidelines are very stringent for a business sold prior to the loan being forgiven. So we've got some very specific numbers here, and we can post that answer in the Q&A dialogue when we post this tomorrow.
Yeah, and if you guys have listened to our webinars in the past, you know that we've closed several transactions with where that's applied. So people have been very good about working this out. So in any event, while Lynette is absolutely correct, you got to follow their guidelines, right? But as long as you do that, you can get deals done. And I think from our conversation with other brokers around the country, I know that there is a lot of stuff that is getting done. So thank you very much, Lynette, for posting that information. And Marquita, I appreciate your suggestion. We'll get that added up to the file when we put it up on our YouTube channel at the end of the week as well. Okay, so new loans. So great time, certainly the best time in our lives to consider SBA lending. Again, I just want to reemphasize SBA's 4 major programs are the 7A, which can be used for working capital, can be used to buy a business, can be used to start a business, and can be used to expand a business. 504 loans designed specifically for large real property and large fixed asset purchases. Express loans are typically bridge loans that just help you get to receiving the larger amount from either a 7A or a 504. And then micro loans are just the small loans, the loans typically 50,000 or less. But so if anybody is interested in a lending product of any time and is thinking about commercial lending, right now SBA loans are incredibly cheap, cheaper than they've ever been. So while we're going to talk about some of the terms of those loans, bear in mind that there is a limit for these special incentives of 1 loan per borrower. So if you're considering taking out a loan to help your business, expand your business, continue to provide for your business, it'd be a good time to think about large global needs for your business. The first key thing is that all the loan guarantee fees have been suspended. So typically think of this as kind of the points that have been assessed up front on the loan. They've typically run in the 2 to 2.5% category, and lenders, I would say most commonly roll these into the loan. So you end up paying for these. You don't necessarily end up paying for them in closing costs up front. generally, I would say it's considered very common to roll it into the loan balance. But, 2.5% on $1 million loan is $25,000. It's significant money. And this applies for all the guaranteed loan products, including the 504. So in addition to that, there are some various fees that are associated with some of these loans as well. In addition to the guarantee fees, some of the other agency administration fees are also suspended. So it's basically making SBA fees very, very competitive with traditional commercial market lending right now. A key thing that's making it attractive to lenders is the SBA has boosted the guarantee to 90% guarantee to lenders. So now lenders, are in a position where they got very little to lose on these deals too. And the thought process is to really spur the lenders into action and help their business clients as much as possible. They've also expanded the standard repayment period on 7As from 7 to 8 years. The vast majority, I would say, at least in our market, it's relatively common to see 7A loans at a 10-year amortization point. And part of that's done so that the lender can then sell, a portion of the loan in the secondary market. And, Terry and I are big proponents of trying to go with 5-year loans, pay these loans off as quickly as possible. But do keep in mind that, even though the repayment term may be up to 10 years, there is no prepayment penalty on the 7A. So,
I put a hashtag by that and say, it's okay to start out with that 10-year amortization, but take the first couple of years with the lower payments and save some cash. And when your business ratios are in a good, ideal situation, then chomp down on that debt. But the key, I think, really to being cautious about that 10 years is that you don't get stuck with a very low debt service coverage ratio, and it's going to take you 10 years to pay for it. That's just a red flag that you overpaid for the business.
Yeah, don't squeeze the turnip dry, right? I mean, leave a little dry powder for yourself. So if you're,
we'll get a couple bankers on the phone, so I don't want to set any of our dear friend bankers on that, but don't be sold alone. And I know she wouldn't do that to you.
Good. Yeah. So we're just trying to help business owners make as fiscally responsible a decision as possible, so that the banks get repaid and everybody's happy at the end of the day, right?
Yep.
But it's a nice deal as well. And then again, what we talked about before, on new loans, you can get the first 6 payments made for you. I mean, this is, if you're doing a large loan up to $9,000 a month in payment, I mean, that's $54,000 gift that the SBA is giving to you for using them as their lender, right? So pretty nice deal in that regard. New loans that are authorized after February 1st, if you are in certain categories, not only do you get 6 months, but you can also get an additional 5 months. So this applies to both 7As and 504s, and these are all the hard hit sectors that the SBA has identified. So there are a lot of business sectors out here that have suffered as a result of the pandemic, and they may be in a position where they can get their first 11 payments made for them. I've never heard of anything like this before. How about you guys?
No, that's crazy.
Yeah.
Crazy. I mean, money's cheap, and they're literally making loan payments for you.
Yeah, money's never been cheaper, and they're making your payment for you, right?
Yeah.
Amazing. And that could be, obviously that 11 times 9 is 99 grand, right? That could be a pretty darn significant deal. So also want to call out that there are special provisions for refinancing, job creation, and retention. Talk to your lenders. Lenders are the best resource for all the specifics of these guidelines that are necessary for these different deals. But the SBA has, and I should say Congress has empowered the SBA to go out and say, look, let's let's take care of our small business community out there. One other provision that that lenders don't like to talk about, but it definitely helps borrowers and lenders, is that as part of this Economic Aid Act, they did authorize the SBAs, and the SBAs have authorized the lenders to provide full payment deferment relief for up to 1 year. And in the past, any type of payment relief had to go to the SBA for approval. So basically what the law now allows is lenders are given all the discretion themselves to make those deferral decisions, and they don't have to wait for the SBA to weigh in on whether or not that's going to be applicable to a particular borrower. So, you know, I think you got to look at this and say the intent of the law is to really empower lenders to go out there and be very aggressive about helping small business owners. And never seen an environment like this in past recessions. You guys have any comments about that?
Well, Steve,
for the brokers on the phone, I mean, hopefully it helps move some deals. It's you know, I mean, you couldn't have a better environment than that, and it's just like you said, it's unprecedented. Unprecedented. It's just crazy.
Yeah, we talked about this last week, and it bears repeating. You know, if you have any appetite for investing to build your business, there's no time like now. I have never ever seen in any scenario like this in terms of being able to use debt and having that debt not only carried as debt where you're responsible for the payments, but having the SBA, the government, cover those payments for you. It's just totally unheard of. The other thing too that I would recommend strongly that you look at is real estate. If you are in a building and you're leasing or renting and you have any opportunity to purchase that building, now might be the time, if it's something you think you're going to be in or have an interest in over the long haul. These kinds of terms just have not been out there for the businesses that had a business component and a real estate component, where we were able to go in and do this kind of financing on the real estate component. It's just, I've never seen it before.
Yeah, it's astounding. And if you guys will remember the example that we used a couple of weeks back when we were doing this for the real estate side, you know, a client of ours had an opportunity to buy a building or lease the building, right? It was a situation where the building was available for lease or for sale. And the lease rate was $16 per square foot per year. And when we ran the numbers on the loan, they could buy it for $3.27 per square foot per year. So which would you rather pay as a business owner? Would you rather pay $3.27 or would you rather pay $16 per square foot?
And then have a fixed asset on the back end. You're holding a fixed asset on the back end. Yeah.
That potentially has the ability to appreciate for you, right? Mm-hmm. It's an amazing environment we're in. So let me talk about a couple of other quick things. Again, SBA Lending Programs, the Economic Injury Disaster Loan falls under the purview of the SBA, and the EIDL loans are now open again. So they are accepting applications online. The SBA was also funded for some advanced grants as well. And what they say on their website is that they are basically reviewing every application and determining where they can apply an advanced grant. So if you have not received an EIDL loan, you are certainly eligible for one. Every state in the country, every zip code in the country has been designated a pandemic emergency zone. So you are eligible to receive these loans. And it's a 30-year loan at a fixed interest rate, incredibly inexpensive. And you may get as a part of that an advanced grant. So
Steve, asking a question for a friend here.
Mm-hmm. Yep.
And this is related to EIDL. So let's say you were a part of the first application process on the EIDL. When you were approved, the grant funding had expired, had run out. Okay, so you're still sitting on an open option to take the EIDL loan that was approved, but you never got the grant on the first round. What do you know about whether or not those people in that situation, like my friend, what do they have to do? Do you reapply? What do you do? How do you get that grant money?
So what I understand right now is that you should call the SBA. They have a special 800 number for the EIDL loans, right? You should call and talk to a loan processor about that situation. So Congress in the Economic Aid Act determined that they should use a portion of the set aside monies to fund the grants for those that in the past missed the grant because the fund had run out of money, or may have gotten a smaller grant than they were eligible for, because if you guys will remember last year, the SBA was allocating what they had was a small pool of remaining funds over all the applications they had in play. So I don't know what the secret formula is that the SBA is using in terms of how they're dishing out these grants, but the intent of the law and the feedback that I've had is that the SBA is doing that and will be reaching out to borrowers individually to let them know what they're applicable for receiving. We've not yet had any of our clients that have said to us that they've received notification that they're getting, a grant that they did not receive in the past. And if anybody has any personal experience about this, we'd certainly love to hear about it, because the SBA is being really vague about this, and I think they're doing that purposefully because they got so overwhelmed last year. So, that old cliche, once burned, twice shy, is probably what's driving, some of the ways that they're operating in that regard. The other new program that has been allocated to the SBA is what's called the Shuttered Venue Grant Program. So this is an amazing program in and of itself. It's equal to 45% of the gross revenues of the business in 2019. So this is primarily designed to help movie theaters and live venue event businesses. And as we're all aware, as part of the pandemic, those businesses basically had to shut their doors, right? And particularly in the movie cinema business, that business has been severely affected as an industry as a whole. So what Congress did is they created a pool of funds that are designed to be a grant only, not a loan, a grant. And the grant is for a maximum of 45% of the gross revenue that the business generated in 2019. And they anticipate that these are going to be very highly sought after. Again, another one of those, all you got to do is provide the documentation that you were open in 2019 and your revenues were X, and boom, they'll write you a check for that amount. So in their infinite wisdom, again, they have opened it up under a 3-step priority application process, and it's not yet open, but my understanding is it will be open in a matter of days now. And what they're going to do is they've set aside the first 14 days when it's open for those businesses that received a 90% or more loss of revenue between the periods April through December of 2020. So in effect, a lot of movie theaters, had to close in April and may not have reopened yet. And whether or not they're ever going to reopen is another question. But during that period of time, if you received a 90% or greater loss of revenue, you will have the first window to be able to apply for these grants. And then the next 14 days, they're going to open the window for those venues that received a 70% or greater loss of revenue. And then finally, after the application process has been open, those 2 blocks of 28 days, then everybody else will be eligible to apply. And in order to receive a grant, you had to have a 25% or more greater loss of revenue. So pretty simple process, pretty pretty clean 3-step application process that's going to take place. And if your business is in this sector, continue to monitor the SBA websites. We'll bring you an update each week here, but it's the feedback that we've received is that it's going to be open in a matter of days. And as soon as it does, we'll bring that information here.
So Steve, as we begin to talk about this sector and the term shuttered venue, obviously it's a COVID term. It isn't the NAICS code that we knew back in the day, but I'm beginning to like imagine in my own mind things like this great winery that I know about that does weddings. And I know that they canceled all of their weddings, the wedding venue. So that could possibly be one. I'm thinking of entertainment locations where it may be a bar that has live music that no longer operates that way. What are the parameters around this? Is it generally most entertainment venues that would have had imposed distancing restrictions related to them, or would they have to have shuttered, completely shut down?
They do not have to have been completely shut down, but it's generally the parameters are your primary form of revenue had to be ticket sales. So you're selling tickets to watch a show, you're selling tickets to come listen to a band in a venue, whether or not cover charges, apply as ticket charges. I'm sure there's going to be additional clarifications, but the primary targeting of this is those venues. Museums apply in this situation, right? Arboretums apply, any type of cultural event center, theaters, movie theaters, etc., cinemas, anywhere where you had to sell a ticket to basically go view some type of an event is what this is designed to apply for. Yeah, so pretty amazing stuff. So all in all, a huge amount of additional money, another roughly $900 billion worth of aid that's out there to business owners. We never expected that here we'd be, 10 months later, continuing to talk about aid programs as we started this last March. I'm laughing because we never expected to be in this position, but we made a commitment to our audience, and I'd say we're living up to it.
Remember, we started back in March and was like, the economy shouldn't really hurt too bad if, everything will be back open in June,
Now we're hoping June 2021.
Jesus.
So lots of stuff out there. Final thoughts that I'd like to leave with our audience is, listen, don't forget state, local, and industry resources. So Marquita had shared her experience as one of the judges for a local community grant program. There are states throughout the country are doing specific things as well. And industries and various associations are doing specific things as well. So if you're a business that's looking for some aid, please don't forget to look under these additional areas as well. So there's a lot of federal stuff that's available to you, but there is also a lot of state, local, and industry resources that are available as well. And folks, that's all I got for us this week.
Okay, well, thanks so much, Steve. Very informative. And I tell you, the recap was really helpful to me, because the first time through, sometimes I don't get it all. And this was very, very helpful. It's getting to the top of the hour, so we're going to go ahead and close out. I just want to remind everyone that we will be sending out an email with links to our YouTube channel and access to all of this material, including the PowerPoint presentation and any documents we referenced. I also want to remind everyone that when you get that link and go into the YouTube channel, go ahead and subscribe, and you will get a notification as soon as we upload anything to that channel, whether we send the email or have actually sent the email or not. So ask you to go ahead and subscribe. And with that, I'm going to bring it to a close, but I'm going to give Terry an opportunity to make any last statements. Steve, you'll have the very, very last word, and we thank everyone for coming. So Terry, any comments you want to make as we wrap up?
I think the one thing just to remind everybody is, I've talked to a lot of CPAs lately, and CPAs, the bankers, they are, with this second round of PPP and everything that's going on, they're swamped. So if, you know, as far as getting your bookkeeping and accounting in order to apply for some of this stuff and getting your 2020 year wrapped up, go see your CPA now, because they are very busy, and, you know, again, bring patience. But I talked to one yesterday, and it just makes me shake my head. They're like, I'm working with a fairly large business client. And it's like, we finally got their July books wrapped up. It's like, July? It's February of 2021, you know? But, and they're hammering the CPA to apply for their PPP money, but they don't even have their financial statements done. So, get your financial statements done.
And you know, this scenario may be the wake up call for a lot of people, that you want to be on top of those financials month in, month out, you know, week in, week out. You want to know where you stand. And is that not what we do in CEO to CEO? Shameful plug. You know, you really want to be on top of those numbers, and you want to have documented evidence of where you stand as a business.
Yep. So,
Steve, very last word.
Boy, it sure makes running your business simpler when that's the case, doesn't it? Yeah, and I echo that. I think you know, make sure you're talking to community bankers too. If you're dealing with the large banks, I mean, we have continued to hear of delays in the large bank network. So don't forget, the community bankers have special set asides if you're interested in these programs. And if you're you know, we'll pick on Bank of America. If you're a Bank of America, JP Morgan Chase, Wells Fargo, if you're a top 5 banking client and you're getting delays and you know, long busy signals and not being able to get through to those folks, don't hesitate to pick up the phone and talk to your local community bankers. Those folks are ready to help you. And then also just underscore, you know, when it relates to things like the employee retention tax credits, get with your accountants and get with your payroll providers. They've got all this done. They should be well equipped to help you in those regards. They know all the details and they can get it done. But yeah, Terry's 100% correct. You're always better off when you are ready and have the information well at hand to be able to access these programs. So folks, I'm sure we'll have more next week. I'm not sure what it'll be. We're getting lots of guidance and people sharing stuff with us on a daily basis, and we'll continue to bring it to you here. We appreciate you tuning in every week, and we'll look forward to seeing you next Thursday.
Okay,
So,
thanks
thank you all.
everyone. Bye-bye.